Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining us for this segment, we have Sara, Mehle, ESG Index Strategist with Nasdaq Global Indexes to discuss the Nasdaq-100 Next Gen ESG Index. Sara, it's great to see you as always. Welcome back to Trade Talks.
Hey, Jill. Yep, today, excited to be here, going to continue the conversation that we started on Friday around the Nasdaq-100 ESG Index. Today, we're focusing on the Nasdaq Next Generation 100 ESG Index. So that's looking at, again, combining innovation, looking at those next generation leaders within the NGX index and overlaying that layer of sustainability via an ESG screen. So the Nasdaq Next Generation 100 Index is an index that is reconstituted annually, whereas the ESG version of the index is going to be looked at on a quarterly basis, so reconstituted and rebalanced quarterly. Again, we're taking just the Nasdaq Next Generation 100 Index, and we're going to apply a few ESG screens to make sure that we do see that level of sustainability there with the current holdings, and that's how we get the Nasdaq Next Generation 100 Index. And this most recent evaluation, we had 9 exclusions, so 9 stocks that are in the NGX that are not in the ESG version. And currently we have 3 ETFs that are tracking this index. The one in the United States, Invesco ESG Nasdaq Next Generation 100 Index, symbol QQJG, and then we have 2 in Canada, symbols QQJE and QQJE/S.
Right. And Sara, if I remember correctly, on Friday when we talked about the Nasdaq-100 ESG Index, only 6 companies were excluded compared to 9 in the Next Gen. Is it screened relatively the same?
Yeah, so we're looking at the exact same screens. Out of the 9 that were excluded this time around in this particular index, 1 was because there were there's not any ESG data available. So anything that does not have ESG data available is automatically excluded. If it has a controversy level of over 5, the Sustainalytics, the data provider we're using for this ESG data, rates them from 1 to 5. So anything over 5 is excluded. If it has a severe ESG risk rating, it's excluded. And then also if the company is said to have violated or is non-compliant with the United Nations Global Compact, that is excluded as well. We also run some screens here through energy, health and life, defense and military, values-based screens. So looking at companies that might be involved with oil and gas, alcohol industry, military contracting, or gambling, things of that nature. And of the 9 that were excluded, like I mentioned, 1 was because it didn't have ESG data. And you might think that all of these names are from the same sector, but surprisingly enough, these names span 8 different sectors. So technology, or 7 different sectors, excuse me. So technology, energy, utilities, healthcare, consumer discretionary, consumer staples, and industrials each were represented this time around in those exclusions.
And how is it performed relative to the Nasdaq Next Gen Index?
Yeah, so looking at compared to the NGX, since the backtest, which begins in 2016, again, this is backtested data, this is up about 112%, outperforming the parent index, the Nasdaq Next Generation 100 by 17%. Since inception back on July 22nd of 2021, the index itself is down. It's been, kind of a rough year, if you will, but it still is outperforming the parent index by over 3%. Again, in 2022, same story, down for the year, but outperformed the parent index by 60 basis points. And then last quarter was up about 7%. Year to date, the index is up 9.13% through yesterday's close, outpacing the Nasdaq Next Generation by 81 bips. So showing that, honing in on those names that do show that extra layer of sustainability, looking at those environmental, social, and governance qualities that we're able to add that margin of outperformance.
All right, Sara, appreciate the insight as always. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.